Okay, folks, another Sunday. Happy Sunday Night Futures Live. Welcome. I'm going to kick things off tonight with TrendSpider. They're having a huge sale. They're doing some sort of every day you lose a percentage point. So you want to act now. Use this link. Yes, I catch a piece if you join. And they're having a huge sale. I'm shocked with the discount they're offering. So this is more of a discount than I get. So I have to renegotiate my deal with TrendSpider. Let's see who we have on here. Corey. Hello. Hey, Bob. Thanks for your help. DPST. DPST. I don't think he did well last week, right? Did poorly. As a matter of fact, let me bring that up. DPST. Yeah, not wonderful. Not wonderful. Yields pulled back last week. We'll talk about it. If we have time, we'll definitely go over Corey. No doubt about it. In greater detail. Franklin. Hello, sir. Stefan. Plantaire. A 10X. We'll take a look at it. I'll let you know. Oh, Palantir. Trader Isaac, how you doing, sir? Smash that like button. Yes, please. Smash the like button. Stefan, again, hello. Chuck, top of the evening to you. Eric, hello, sir. Larry, hello. If we ever needed the amazing Kreskin, we need him now. I'll try to fill those big shoes. OG1 Kenobi. Hey, brother, I can't help but laugh. Every time I see that name, I have to laugh. I love it. Okay, so what we're going to go over tonight. All right, so I got a few messages this weekend because I talked politics. Folks, if we're not going to talk about who's going to benefit from a Biden presidency or a Trump presidency, in all probability, it's going to be a Biden presidency. I'm not a naysayer. I'm not a never Bidener. I just want to see the votes. I just want to make sure it's a clean election. We're going to go by the assumption tonight that it is going to be a Biden presidency. In all probability, that's the direction that we're heading, absent a huge amount of evidence on the part of the Trump people showing that there was election fraud or malfeasance of some sort. So we're going to go by that. We're going to talk about the sectors that should do well under a Biden presidency. And we're also going to talk about sectors that may not do well. And we'll talk about how we may have to change up our strategy moving forward, because going into the election, we were positioned more towards a resurgence in the economy. And you saw cyclical names heading into the election do fairly well. Energy was doing well. Other names were doing well in the cyclical area. That all ended last week. Why? It's because stimulus is probably going to be a lot smaller. Nancy Pelosi should grab that deal she was offered. And that, unfortunately, because I was hoping for a larger deal, not that it's good for the country as a whole longer term, short term, yeah. But it looks as though, given the performance of growth stocks, last week we saw Amazon, Facebook do very, very well. We saw emerging markets do very, very well. We're very bullish on emerging markets in any environment. As long as the U.S. dollar, no matter who is president, as long as the U.S. dollar is dropping, we want to be long of emerging markets. Nadia, hello. Joseph, hello. TK John, if we have time, I'll definitely get to it. Qualcomm, okay. All right, so EPI is on our watch list. That's the Wisdom Tree India Fund, breaking out, major breakout there. So we've been bullish on these names. We remain bullish on these names. We're going to be looking to add more to our emerging markets trade. Unfortunately, there's a lot of overhead supply on some of our positions at current. So I went over strategy a bit on the weekend commentary with members. It's posted in the members area. Other names we like going into the new trading week, is HGV. That's Hilton. What's the full name of it? Hilton Vacations Grand. We've been watching this one for a while. Hilton Grand Vacations. We've been watching this one for a while now. It's looking good. And this is a daily chart. We're going to go to the futures in a moment. I didn't forget. But on a monthly chart, you're seeing a major, major breakout here on HGV. Assuming that we close above resistance. Early in the month, a lot can happen here. Hey, Pat. I'm going to be doing pot stocks, Pat. Definitely a sector that is going to do well. Honestly, I think they would have done well no matter who was president. You had the referendum in New Jersey passed into law. I think it's recreational use in New Jersey. So, Trisha, I didn't say hello to Trisha. Hi, Trisha. My apologies. I think the pot stocks are going to do very well, in particular under a Biden administration. They need access to banking, and perhaps that's what they'll see under a Biden administration. Hey, Will, good to have you, brother. All right, so let's go take a quick look at the futures action. Then I'm going to talk to you about I'm going to talk more about politics, but not about what you think. It's not about the presidency. That is not the most important decision to be decided this week. And it probably is going to be this week that we're going to know who the president is. What's more important is the Senate. And people are not pricing in a flip of the Senate. We're going to talk more about that in a moment. So these Republicans that are out there that are feeling good that they held their seats, gained some in the House, they better not get too complacent. They have trouble coming down the pike. So more to come on that in a moment. Then we'll talk about earnings coming out this week. Let's start off with, I want to take a look at the dollar. The dollar is a basket case. And we have already, is this open? I want to make sure this is open. Yep, it's open. Yep. Houston, we have a problem. So the U.S. dollar is gapped down to a new weekly low already, like that. I think we're coming down here to 91.76. Fairly soon. So if the dollar is this weak, I need to take a look at Bitcoin, gold. I bet you they're ripping right now. Let's go to Bitcoin first. Bitcoin is up 0.25 percentage point. It's going to go higher. It's going higher. Look at this setup here. This is a 4-hour chart. All of these will be 4-hour charts, unless I say otherwise on the futures. So it looks as though we're going to break out here. So crypto looking very strong as we proceed into the new trading week. We were overbought. We dropped back down into an orderly consolidation. Bullish reversal bar, this last 4-hour bar. Looks as though we're going up higher on Grayscale Bitcoin, Pat. They charge fees, big fees, but I'll go over it for you. I'm sure it's looking very similar to Bitcoin. Gold. Gold is up. Already we have, do we have new weekly highs already? Not quite yet. Not quite yet. The high of the week last week was, oh, we do have new weekly highs. This is when? 11/9. Yeah, the week of 11/9. We already have weekly highs. 1959. It's not showing that on my 4-hour chart, but okay. We're pressing up higher. It looks as though Bitcoin, gold, moving up higher on weaker dollar. Remember, the correction in the US dollar is inflationary. So that's why you're seeing gold and Bitcoin move up higher. So commodities priced in dollars, which for the most part are most commodities, they're going to rise in price. Take a look at, we'll see what the ag names are doing right now. Wheat, no negative reaction yet. Corn, consolidating, up about a 1/4 percentage point. Silver, ripping. New weekly high, a breakout above resistance. We are long. We're going to be looking to buy more this week. I don't want any dollars. I don't want to own any dollars whatsoever. If it's not in gold, if it's not in the gold miners, if it's not in silver, it should be in emerging markets or short-term swing trades to the long side or to the short side for that matter. It doesn't matter. But that money's got to get put to work. Having it sit in a money market account is not the wise move right now. So silver breaking out, looking very strong here as we proceed into the new trading week on a very weak US dollar. Bonds are down slightly, flat, to be fair. Let's take a look at bonds on a weekly basis. Stubborn resistance above. Mortgage yields hit, I believe, record lows this weekend. So the question becomes here, do we break out on bonds or do we roll over? Because remember, the weekly chart and the monthly chart, for that matter, on the 10-year yield is breaking out. Last week, yields did pull back some, but the trend, the short-term trend anyway, is higher on yields. But bonds so far are fighting back a bit after tapping the third standard deviation Bollinger Band on a weekly time frame. Back to a 4-hour chart. So we'll see. They did sell off in the back half of the week last week. Gasoline prices. That's nat gas. I clicked the wrong button. Nat gas week was weak last week. Pardon the pun. Gasoline prices, 4-hour basis, consolidating. I'm looking for signs of inflation. Oil, up. 0.75 percentage point. This is light sweet crude, Texas light sweet crude. To equities. Wow. This is the NASDAQ 100 growth. As I mentioned earlier, growth is going to, on the pullback in yields, it's going to move up higher. The Russell 2000. It's up. It's struggling, though. We had broken out here on the 5th, pulled back, held, bearish reversal bar on a 4-hour basis. On the 6th, now we're struggling to hold on and capitalize on gains. Let's bring up the Dow. I usually don't talk about the Dow all that much. On the futures, anyway. So much so, I don't even know where to find them. Where's the Dow? Here we go. Dow's up over a half percentage point. No new weekly high yet. Clean breakout. I just want to know when we go to a new weekly high. So as we begin the week, equity strong, dollar weak, gold strong, silver strong. We're not seeing ag. We're not seeing energy prices rip all that higher. Nat gas is actually coming in. So as it stands right now, no major pressure on the inflation front. But as the dollar gets weaker, those inflationary pressures are going to push up. Let's go to some headlines on the market. So, I know people don't want to talk about this much. I'm not rendering an opinion about who should be in the White House or what have you, but as Obama said, elections have consequences. And when you take a look at not the presidential race, forget about who gets into the presidency right now. That's not the major election, believe it or not, for the markets. What is major for the markets are the Senate runoff races in Georgia. If the Republicans lose these seats, they lose the Senate. And that means that you're going to have a Democratic president, Democratic Senate, Democratic House. The markets are not going to like that. Certain sectors will. But the markets overall are not going to like it. And most certainly, the currency markets are going to poop all over themselves. Because the spending that's going to go on with reckless abandon it's not me making it up. They're saying what they want to do. Green New Deal, healthcare for all. That costs money. There's a price tag there. So the reason why you're seeing the markets move up right now is because you have gridlock. The markets like gridlock. If they don't have gridlock, no matter who's in charge, if you have one-party control, the markets don't like that. Whether it be Republican or Democrat, doesn't matter. It's a label. They don't like absolute control by one party. So this is a problem for the Republicans in particular, and it's something that we need to keep an eye on because it matters. Because there are certain sectors I do not want to be a part of, healthcare in particular, if you have a Democratic Congress and a Democratic White House. So there are going to be certain sectors that are going to suffer really bad. So keep an eye on that. Now, a threat to this rally is the end of the election, right? Pelosi screwed up. She should have taken the deal before the election. She had, $2 trillion? Poof, gone. McConnell is now eyeballing not this election. He's eyeballing the 2022 midterm elections. That's what he's looking at. And he's going to look to put the screws to Pelosi. So he's already come out and said it. And this is why I brought up this article. Basically, he said, expect a smaller package due to he's going to hang his hat on an economic recovery. And you saw some numbers come out last week. I frankly think they were manipulated. But McConnell's going to dig his heels in here because he can. And he's in for 6 more years. He's good to go. So he doesn't care. And he's eyeballing the 2022 elections. So watch out for this. This is not a catalyst any longer unless Pelosi gets her way for these markets to proceed up higher. So the question then becomes, with a market this expensive and this extended, what keeps this going? You basically have had Jay Powell go to the Congress and say, listen, I'm out of bullets here. You guys need to pass stimulus. So as this can keep going up higher in the short term, at some point in time, the honeymoon is over. So let's be aware of how pricey this market is, how technically extended it was, and how important it was to get stimulus, which is now only getting smaller. It'll come, but it's going to be smaller. Let's go to chart requests. Oh, before we do that, sectors that are going to do well. And Pat kind of ran me on one of them. And I want to talk about the junk bond market, which I was frankly surprised to see act so well last week. And you may be asking, what do you care about the junk bond market for? Remember what the debate has been about Biden-Harris, whether or not they're going to take the knees out from underneath the frackers. Historically, they have been anti-fracking. Most recently, to get elected, they've been pro-fracking. So all I do is I go to the charts and I take a look at the fracking names. And I start with the junk bond market. Why? It's the junk bond market that finances the frackers. So if the junk bond market is taking it on the chin, then I suspect the frackers are going to do poorly. But my suspicions were not validated last week. Now, maybe this week they'll be validated because there is a conclusion, or at least a media conclusion, that the election is over now and that we have a Biden presidency. As it stands right now, I could have made that assumption last week. I was under the assumption going into Friday's trade that in all probability we needed the position for a Biden presidency. But junk bonds did well last week. They didn't react to the negative. And if you take a look at EOG, these are big fracking plays. EOG Resources, they were down on the week, along with Energy. Devon, it was up on the week. Fang, this is Diamondback, it was down on the week. And frankly, I got to tell you, it looks as though these names are going to break. Hey, Paul. And you can see using the automated trend lines. Hey, folks, if you're just joining in, use this link. Yes, I catch a piece. Throw a dog a bone. 64% off of TrendSpider, all their programs tonight. I'm using it here now. If you use the automated trend lines, you can see we have, on a weekly time frame, stiff resistance on FANG. If we close above this mark, we would be buyers. But as it stands right now, it's not looking good. But the junk bond market is moving up higher. So it really doesn't make sense to me right now. I'm going to keep this active for a couple of weeks. And we'll watch it. So these names may suffer under a Biden presidency. Now, what will do well? Weed. Canopy Growth, one of my favorites, ripped last week. They're going to do very, very well. A bit extended on a weekly time frame. They're trading above the third standard deviation Bollinger Band. So might they make new weekly highs? Sure. Would I buy them now? No. I would wait for the pullback. Loving RSI. Daily chart. Very extended on a daily time frame. Pat, what was that weed stock you wanted me to take a look at? Pat, can you pop that back in there? I'm trying to go through the... if you had a weed stock, I thought you popped in a weed stock. But CGC, one of my favorite stocks, going into the new trading week for weed stocks. And I shouldn't say, let me rephrase, one of my favorite stocks, but I wouldn't buy it now. Wait for a pullback. We're going to get it on a weekly time frame, on a daily time frame. We're extended relative to its third standard deviation Bollinger Band. We're going to pull back. Let me go through these symbols so that I don't miss any. I'll try to get as many as I can. Stefan, can you give me the symbol for Palantir, please? I'm going to do Workhorse. Yes, they're doing earnings tomorrow morning, I believe. QCOM. I got to go to the members area first. Bear with me, folks. Okay, I have a bunch to go over here. TDOC. All right, wow, I have a lot of symbols to go through. Cena, Corey. Oh, Corey, you're in here already with the DPST. All right, SOXL. All right, let's do this. Let's blow through these. I have a lot to get to. TDOC. Teldoc Health. Let's get this log off. Monthly time frame. Liking it. Monthly time frame. We have a breakout on the month. Weekly chart. We broke out back here. The week of September the 21st, rallied, hit resistance, no great shock, pulled back. Now we're retesting the breakout point. Exactly what you want to see. This is a buy. Daily chart. Hold on one second. All right, we do have some resistance above here. I would buy any pullback on the shares. And I would look to add more right here at 221.81. My little note to myself. We'll keep this active for the week. So I would buy a pullback. You have a little bit of resistance up here. Not a little bit, a lot of resistance up here. Immediately above. But once we get through this resistance level, it's going to be game on for Teldoc. Nice chart, looking good. If I owned it, I would stay long, and I would add more on the breakout. Next chart, DHI. And I have another sector that's going to do really well under a Biden administration. I want to go to that as well if we have time. DR Horton. Monthly chart, we broke out in July. Lethargic trade here, retest back in October. Reversal bar so far this month, an inside bar. Not much happening here. Weekly chart. Yeah, be careful here. We broke down the week of October the 19th. They're going to try to recapture. This is a head fake. I wouldn't be a buyer here. Let's take these off. Automated trend lines. 64% TrendSpider. Use the link below. See how that works? We're hitting resistance. We're being rejected. I would not buy these shares. I would buy them on a recapture of 75.80 per share. We got to close out the week above that mark, or at least a day. Now, you can see using the volume by price bars here, where we found support on Friday was right at the bottom of a volume shelf at $70.14. So if you're looking to swing trade this and you're going to buy it no matter what, fine. Buy it at $70.14 per share, but use a stop right below last week's lows, which just happens to be the lows of Friday, which was at $69.71. Stop out. And if it holds 70.14, great. Then look to add more on a breakout above 75.50 per share. You can even drop that down to where this volume shelf is at around 74.50. Add more there. So not a bad risk-reward entry point right now, assuming that you use a stop right below. But remember, I have to go back to that weekly chart. This is not a wonderful candlestick. The market's sending you signals on a weekly time frame that there's resistance above. So be careful. Remember, we broke down. They tried to recapture it. They were rejected last week. So be very, very careful here. AWK. America Waterworks. I haven't gone over this one in a while. Looking good. Let's go to the monthly chart. We want to identify where we've been to get a feel for where we might be going. And we're going a lot higher. This is a monster. Let me edit these. Up color. Red. Red. Okay. So we have a lot of room between where we close and the 3D Bollinger Bands. No worries there. RSI looking very nice. Higher lows, higher highs. Good stuff. We have new monthly highs. Weekly chart. We broke out last week after a consolidation. Right? We rallied, pulled back, followed through, game on to the long side for AWK. Daily time frame. If they rip it up higher tomorrow, which is entirely possible, keep in mind that we'll be trading up and into the third standard deviation Bollinger Band. Be careful. Allow for a pullback, then enter. If I were long, I'd stay long. I looked to buy more on any pullback. I think we're going a lot higher here. All the stars are in alignment for these shares to move up higher. Very bullish. APVO. Aptevo Therapeutics, ridiculously extended on a daily time frame. We'll come back to this monthly time frame first. Massive breakout. We are trading above the 3D Bollinger Bands. Be careful. RSI, beautiful. Stokes, beautiful. They're doing exactly what you want them to do. Weekly chart, very extended, folks. This was the mother of all short squeezes last week. I would not buy these shares. What I think is going to happen here is this. So this is a train wreck waiting for longs that are going to chase it. It's not going to end well. So what I would do is this. If you're looking to buy the shares, I would set an alert down here. We closed out where? On Friday. 2370. I think we're coming down here to retest. Support. We'll keep a little bit of sensitivity to include this rising potential support level. I like this lower band first. APV. We just broke out on the Dow Jones. That was that alert that just fired off. Dow Jones new weekly highs. I'll share this with you so you have it. I'm going to drop this chart in the chat box. I don't know why I just did that, but why not? I could. All right, so APVO, wait for the pullback, retest. And I think that in all probability, on that pullback, we'll consolidate nicely. Then we move up higher. But be careful here. It's very, very extended. RSI in a daily time frame is at 90, folks. I would not buy these shares. I didn't realize that. I didn't realize RSI was that heavy. I would not buy the pullback. I'm scratching that last strategy. This is not going to end well. I like this level better. I'll keep the other alert live, but I want to see this stock back down in the teens. I think that's where it's going to go. We're going to track this no matter what. It's a potential short. So be very, very careful with this stock. RSI 90, trading right at the 3D Bollinger Band. Very extended. Avoid, 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 avoid. What else do we have? NVIDIA. Semis, all-time highs last week. Growth back in favor. NVIDIA, how did it do? It resumed the mantle of being a key or king of the chips. It broke out on the month. Month isn't over. Weekly chart. A beautiful breakout last week. Watch for pullback and a retest of 563.47. We'll keep some sensitivity on there. 4 hours. We'll keep it active for the week. Daily chart. It's going higher. It's going higher. NVIDIA looking very strong. Breakout on Friday. Bullish key reversal bar. Can't say enough about it. Looks strong. It's probably going up higher. Very, very positive. Corey, DPST. I don't know how that got up there. DPST. All right, so this is an interest rate play. All right, so for those not familiar with what DPST is a leveraged ETF. So it's 3 times, extremely volatile, not for the faint of heart. And it's a pure play on regional banking, mortgages, loans, not trading, unlike the money center banks. They are highly sensitive to declining interest rates. Interest rates pulled back dramatically last week. So, as you could see, DPST did not do well on Friday. How did it do on the week? It tried to break out, but it was rejected. And you have a lot of resistance up here. Let's see if what I'll do here is, I would do this, Corey. I would either A, and it's not impossible. In fact, if yields pull back further this week, it's highly probable that we remain in this triangle formation and we retest the lower band of support. And I want to get notified if we break through it as well. With yields pulling back, I would not buy the breakout on DPST. I would expect to see a pullback to support. And I would stay very small, because if yields begin to break out, that's a good thing. You'll see DPST move up higher. The however is that if yields continue to drop down, which I don't think that they will, if yields continue to drop down, DPST may very well break support. If yields move up higher, DPST will break out, assuming that the stock market does not roll over. Let me share this. Corey, I just dropped that chart in the box. Daily chart. Yeah, there's no compelling reason here. I mean, we had broken out on Thursday, rejected, and a breakout point failure on Friday. Wait for that support level to get hit. Or at least if we do manage to rally up higher, make sure that interest rates are moving up higher as well. Watch the TLT. What else do we have? SOXL. Monster. This is a leveraged ETF putting you long of the semis. It's in fuego. It's probably going up higher. Monthly chart, very similar to what NVIDIA looks like. Monthly chart, a powerhouse, but it's early in the month. A lot can happen. Weekly chart. Where I would be interested in it is right here. If we get a quick pullback on the week, keep that live for the week. Very powerful chart. Very bullish. I may not get the pullback. If it made a new weekly high, would I be okay with buying it? Sure. I think that it's probably going to go up higher. But watch interest rates. Watch interest rates. If this, I have this up here ready for a reason. Remember what we're doing on interest rates. We have broken out. Last week was the first down week in several. And we closed well off the lows of the week. If we start creeping out and above spot 90 or near 1% on the 10-year Treasury yield, you're going to see technology flutter a bit. And you'll see growth names, I shouldn't say growth names, value names, cyclical names perform somewhat better because there's an expectation of economic growth. So keep an eye on this. It's very important. And if you see the 10-year yield move up higher and the stock market does not have a negative reaction, look to banks. Look at cyclical names, airlines, things like that. And be wary of technology. Look at this move higher we've had these past several weeks. Technology did not perform well. When did it do well? When yields pulled back last week. All right, so that's all I have in the members area. Let's go back to the chat room. We have about 12 minutes left. Let's see. WKHS, that is reporting, I believe I saw it, tomorrow morning. Yes, tomorrow morning, reporting earnings. Beware. Workhorse Group. Struggling. This is a monthly chart. Horrible month in October, November. They're trying to rally it back. $17.54 is resistance. I wouldn't buy it until we closed above that mark. I certainly wouldn't try to buy it before earnings. I'm not sure what time they're coming out. I would not try to front run this stock ahead of earnings. Weekly chart. An inside week last week. You know, it was an up week, but still, the bears won. Why? It's because they didn't close it above significant resistance. Daily chart. We have a breakout on a daily time frame, a retest on Friday of daily support. But still, that 1750 mark is elusive, and you also have a volume shelf right up here as well at 1793 per share. So if they report good earnings, you see a positive reaction on the shares. If they pull back, if they happen to gap up, if they pull back, they tap $18 a share down to 1750 and it holds, I would be a buyer of the shares. That's Workhorse. QCOM, it's probably going to look the same as, I don't like the daily chart. It's extended. It's going to look the same as the semis. In fact, it's more extended than the semis. So here's the value of TrendSpider. Again, over 60% off, 64% off. It's ridiculous. So grab it now because I don't know how they're doing it. So using our trend lines, automated trend lines, you could see we were stopped dead right at resistance last Friday. The RSI still looks good. Weekly chart. It looks good. It looks very good. The greedy dude in me, I want to see a pullback. Nice weekly breakout. Looking good. Probably going up higher. Now, where I pause with QCOM is the fact that we are very extended on relative to the Bollinger Bands. So I'm concerned there. But I would buy any pullback. If they fill this gap, I'd be a buyer of that filling of the gap, which opened up on Thursday. So QCOM looking really good. Short term, very short term. Extended, longer term. Looks like it's going up higher. TNA. TNA is an ETF putting you long. It's a leverage ETF putting you long with the small caps. TZA is its evil cousin. Very close to a monthly breakout here. Let's call it $39.70 per share would be a nice breakout on a monthly time frame, weekly chart. So the game here would be to buy the breakout. That would be attractive. If we close above this resistance level. If we happen to pull back on a negative reaction in the market for whatever reason, I'd be a buyer of a defense of this support level. That's what I do. I wouldn't buy it right here, right now. I'd wait for either a pullback and or a breakout. And Friday was not a wonderful day. In fact, we had a bull trap on Friday. So the rule of thumb I have is when you get a bull trap, you may be asking, what's a bull trap? Okay. So on Thursday, we broke out above resistance. Good stuff. Great stuff. Normally, what we look for is, may not be the next day, it could be several days later. You look for a retest of the breakout point. That's traders being OCD, obsessive compulsive disorder. A healthy chart, you would see a win by the bulls if we pull back. Could even be a down day, it doesn't matter. As long as they defend the support level, that's a win for the bulls, even if it's a down day. That didn't happen. The bears won on Friday. They failed to hold support. In all probability, when you get a bull trap, you get a retracement all the way back down to the lower band of support. I'm not loving the small caps, and I'm saying that in the face of the small caps and the futures doing pretty well. They're up about a percentage point. No new weekly high yet. So it's a long time between now and the closing bell tomorrow. We'll see what happens. So beware here. Be very careful of a bull trap, breakout point failure. Call it whatever you want. It's not good, what we saw on Friday. GBTC, this is the Bitcoin Trust. for the most part, this is for Pat. For the most part, this is going to trade along with Bitcoin. Monthly breakout. It's validated by Bitcoin. It's going up higher. I'd rather own Bitcoin than the GBTC due to the fact that it has a lot of fees associated with it. Unless, of course, I don't know if this has, if it's optionable. You want to sell calls against it. I don't know if it has options. It's a trust. So I tend to doubt it, but I could be wrong. No options. So me, if I can't sell calls against it or sell puts to speculate and have the shares put to me, I would rather just own the crypto outright rather than paying fees on it. So GBTC looking good. Monthly breakout. I'm sure the weekly chart's going to look the same. Very strong week last week. Very little in terms of overhead supply. Daily chart. Unlike Bitcoin, it doesn't trade 24/7. And this is the closing price of Friday. Obviously, if Bitcoin holds its gains right now, we're going to see a bit of a gap up higher tomorrow morning. So GBTC looking good. Snow. No data on a monthly chart. We'll skip it. Very little data on a weekly chart. $265.05 is resistance. Daily chart. We were in a wedge formation. The lower band failed to hold. $273. You know, if they managed to recapture and close it above $265.05, fine. I'd be okay with opening a position as long as it closes above that mark, and then add more on a breakout above at current $272.69 per share. But that's declining. Let's do this. Then I'd set up another alert. I get very little sensitivity, no sensitivity. Add or open. That's the play. Larry, I'm going to drop that chart in the box for you. All right, folks, it is 7 o'clock. We'll leave it off with, wow, guys, there's a ton here. You guys got to join. I got way too many to go over. Let me pick a couple of, I'll go over XLE. URA we own, and I went over it yesterday on the week ahead commentary. Larry, yes, please, everybody smash the like button, please. Thank you. Okay, energy. I'm worried about energy. As I said earlier, yields dropped down. A deal of stimulus is going to be smaller. We're going to get one, but it's going to be smaller and may not goose the economy as much as what had been expected. So that's what's hurting the energy stocks right now. Along with, there's a big unknown about what's going to happen under a Biden administration to fossil fuels. You know, he could just write some executive orders and that's it. That's it. So energy is failing right now. We're trying to hold on to support. The March lows, if they fail, you're going to see Armageddon in the energy space. So what I'd be watching for right now here is a new weekly low. If we start breaking down again, you know, I have my ex-dividend date, I believe, for ExxonMobil on the 12th, and I'm going to be out after that if necessary. But I'm worried about energy. We need some sort of a deal. We'll see what they have to say. Right now, it's under a lot of pressure, so I'm worried. In particular, I'd be worried about the frackers. Zoom's going to rally. This is a weekly chart. Bullish key reversal bar last week. Looks like it's going up higher. Again, watch yields. Watch for a breakout above 50. Let's call it 505. You're going to close above 505. I'd be okay with opening up a position here. I'd be an aggressive buyer right here at 434 per share on a close above that mark. So Zoom looking good. Or plug power. Looking very good. Very good. So this segues into what's going to do well under a Biden administration. Your renewables are going to do well. So Plug Power broke out last week. Very good looking chart. This is going higher. A bit of resistance up at $19 a share. Beyond that, here's your upper band of resistance. That's going to change, so I'm not going to spit out a number. Daily chart. You just need to wait for a breakout and a close above $19 a share. You get that. It's a buy all day long. I'm not sure when earnings are. I would watch out for that. Another name I like in renewables, First Solar. This was not a request, so I'm not going to spend much time here. You could see that we hit resistance on Friday using the automated trend lines. But the macro view, the bigger picture view here is this, the monthly chart. Forget the daily chart. Major league breakout here on First Solar. So I think that's going to be the case for many of your renewable trades. They're going to do very, very well. They were going to do well anyway under a Trump administration, even if a rabbit gets pulled out of the hat. And let's say he stays in office. If you get a pullback on these names, buy them. I'd be a buyer of them. They've been doing well for a while. No matter who's in office, you got to buy these stocks. They're going up higher. You're not going to stop technology. It's not going to happen. Pat, we'll leave off with you. You want to take a look at the airlines? Let's go to, we'll use XAL. Bullish key reversal bar last week. Ultimate oscillator looking good. A lot of overhead supply here. Triangle formation forming. Daily chart. We're right at a breakout point. So here's what's happening on a daily time frame with the airlines. You have the 50-period moving average in blue. That's flattened out. The 200-period moving average is acting as a declining ceiling. I think that we're going to break out. I think we're going to break out. I think odds favor bulls. It's not an aggressive long, but I think the wind is at the back of bulls. And with that, folks, I'm going to say, everyone have a great night, a profitable trading week. Smash that like button. And don't forget, 64% off of TrendSpider. It goes to 63% tomorrow, and it goes down 1% per day. So jump on it now. Everybody have a profitable trading week, a great night. Be well.